And so buyers are trying to get some deals done. Sellers are looking to get some deals done. And there's some very specific reasons why someone wants to get a deal done this year.
Hello and welcome to this week's Shoot the Moon podcast, broadcasting live and direct from Revenue Rocket World Headquarters in Bloomington, Minnesota. With me today are my partners Ryan Barnett and Matt Lockhart. Welcome, guys.
Thanks, Mike. Good to be here. As the days are getting shorter, isn't there ever any clear indication that the days are running out on 2025? And Ryan, I saw a preview, and I think our topic is kind of related to that.
Yeah, absolutely. As you know, on the show, we talk about M&A initiatives related to tech services related businesses. So if you're in technology today and you run a business that's got a lot of services associated with it, we're really a strategic and tactical podcast for you to listen to on getting deals done in this space. And to your point, Matt, the days are literally getting shorter. We had a discussion in our call today on when daylight savings time is coming up. And Matt, you mentioned early November, which is just around the corner. And we've got several deals that are under LOI. And so buyers are trying to get some deals done. Sellers are looking to get some deals done. And there's some very specific reasons why someone wants to get a deal done this year. So Mike, Matt, today I wanted to pick your brain a little bit about how do we get deals done with the remainder of the year. So we're talking about 75 days without cutting corners. And so it's a sprint to year end. So Mike, this has been an interesting year so far, and looks like Q4 might come and be a little bit more of a deal maker's quarter. What makes this time of year, this last fourth quarter of the year, just so unique?
Well, buyers want to deploy capital, right? It's been a little bit of a slow year, I think, for many buyers, particularly financial buyers, this year. Finding the right deals, being able to get them done, being able, deals to make it through diligence. We've heard about a few that have fallen out of bed due to complications in due diligence. So I think most buyers are looking to deploy capital, whether you're a strategic buyer who's put some cash on the balance sheet, or you're a financial buyer who's looking to deploy capital. So I think in many ways, pent-up demand exists. We sort of had a lot of sort of hand-wringing around the first half of the year pursuant to financial markets and what was going on, what the impact of the tariffs were going to be, what's going to happen with interest rates, all that stuff. Seems since we've started down the path of what we'll call quantitative easing in the interest rate environment that, folks are getting moving and want to do deals. At the same time, certainly there's a lot of sellers that are looking to get something done. And then it brings us to, well, we as of today have, 2.5 months to the end of the year, and we got to get stuff done. So look forward to this discussion about how to manage to that timeline and some of the dependencies around that.
Sure. It seems like if you're trying to get a deal done now, it means a lot of prep work has probably gone into it. So there's a little level setting. Matt, if you're in a process and you're trying to buy a firm today, or if you're trying to sell a firm today, where do you got to be before you can say, hey, maybe 2025 isn't my year for a transaction?
Yeah, I mean, we've talked about this in terms of readiness before, Ryan, and the old axiom that you run your business like you're never going to sell it, but you've got it managed, and you've got your books, and you've got everything in place that you could sell it tomorrow. Now, we all know that in most cases that's not necessarily the fact. But if you haven't negotiated and executed an LOI, going to be difficult, right? If there isn't agreement in terms of what is the critical path for due diligence, and any associated quality of earnings, and that there's real clarity into that project plan, well, then it's going to be tight. We have to remember that there's a couple of holidays that tend to start to take people's attention. So you've definitely got to be down the path. Your post LOI. Now, if that is the case, then it's super viable that you can close by the end of the year. And, we're using this topic of the Q4 urgency and the momentum, and it's real. But all of the axioms that we're going to talk about in terms of readiness and preparedness, both from the buyer side of the table as well as the seller side of the table, these axioms are true regardless of what quarter that you're in. Because, one of the things is time and delays can kill deals. And if they don't get killed, boy, they can really wear you out. So having an efficient path to close, regardless of when it is an efficient and organized and prepared path to close is absolutely critical for success.
And it feels like this time of year, we get this natural deadline-driven thing. Mike, is there any science or even just a pseudoscience here on what the holiday period ends up going in the end of the year? How do deadlines start to form because of the natural cadence of the year?
Well, I think, again, in a year like this that's been somewhat back-end loaded for deal making, I would say that, there's always a sense of urgency, particularly when someone signs an LOI. Hey, we want an efficient process to close. But, the end of the year creates a very interesting focus on that. People want to pull deals in this year to be able to put that revenue and profit on the board, right? If you're an acquirer. People who are sellers, may also have tax-related matters that they're trying to resolve by putting a deal into a particular year, whether that's, a deal this year or a deal next year. We always see sort of tax considerations kind of get amplified about this time of year. And there's also pressure from shareholders and funders to put capital to work. And they oftentimes have have some internal deadlines around the end of the year, the end of the calendar year for doing so. We see always a sort of flurry of activity in September and October around, wanting to get deals done by the end of the year. I think to Matt's point, if you're not under LOI now and you don't have a very clear project plan to close, that's agreed upon by all parties, and you're making headway on that, it's going to be very challenging. We typically say it takes about 90 days from LOI to close. If you manage it well, you can do it faster. You can typically do it in 60 days if you have a very solid plan that's been properly resourced. And I'll emphasize properly resourced because it does take a village, right? You need to have financial and due diligence resources, lawyers, deal makers and advisors that can help break through sticking points, as well as others, all available to get the work done. And if they're not, then that puts a drag on a schedule. Any one of those swim lanes can pull a deal out. And I think you have to have regular touch points with all parties. Usually the cadence is weekly, we find to be best in order to keep everybody, moving in their lane towards the agreed upon date. Ryan?
Yeah, that makes sense. I'd love to just transition a little bit. What are some of those things that can make that process be just very solid? I know there's a lot of preparation that comes up here, and that preparation can really separate fast closer from a frantic. Matt, what are a few things that people can do to ensure that the right things are in order? So when diligence teams and the legal teams, once they start digging in, that everyone starts to be on the same page and are reading from the same playbook.
Yeah, I think in just sort of review of the most, the critical stages of the due diligence process. So we're, again, we can get to close by the end of the year. We've signed an LOI. We've kicked off the due diligence process. We know that one of the first gates within the due diligence process is the financial review. It could be a full and complete quality of earnings. It could be a risk-based or QofE light. But it is validation of the cash flows and through the P&L and showing up on the balance sheet. Really understanding the areas that are going to be that could be trickier for a buyer to assess, and having those things identified and brought forward and put on the table early is absolutely critical. Along those same lines, ensuring that whoever is doing the financial review is prepared in the aspect of understanding the business. So, we had a scenario here recently where we're representing a firm for sale, and the buyer brought in a reputable firm, a large accounting firm, to conduct the financial review and the quality of earnings. However, their team members really didn't understand the industry, and they didn't understand the business. And so, when you're thinking about, it's not just the good plan, but ensuring that the right people are on the plan as well. So, those are two things, right? Understanding what all is going to be done, understanding the areas that are going to be harder, making sure those things are surfaced, and ensuring that you've got the right people on it. Okay. So, and that doesn't just pertain to the quality of earnings. You'll move on to your operational and or contract reviews and ensuring that those people understand the business and understand the nuances of the contracts, right? So you've got this plan. You're surfacing the areas that are of highest risk. You're not treating every element that you're reviewing as though it's of the same importance. And then you've just got both sides on the ready to make sure that the conversations to address any questions and or concerns are done. So it can't be this back and forth. Think of a waterfall process where you're trading stuff back and forth without communicating. That's not going to work. It's got to be more agile, and it's got to be, more communicative. So, I think it was Mary Poppins, well begun is half done. Ensuring that in your preparation, as you're kicking off, you've started to identify those things. As you're assessing your team members that are going to be working in the process, ensuring that they're well prepared and they've got the knowledge to be able to do so effectively. I mean, having a solid project plan that is agreed upon by everybody with dates for the stages that are going to be signed off on. And then we haven't even talked about legal yet, but that's an area in and of itself that can either go efficiently or it can go really, really slowly based upon the preparation of the legal process in and of itself.
And Matt, I want to just key in an idea here. You brought up the idea that we're doing the due diligence here to make sure that that risk is appropriately aligned. And Mike, at Revenue Rocket here, we take a risk-based approach to doing some of this due diligence. And it means that when you're turning over a rock, you're making sure that you're turning over the right rock and that it has the right weight and scale to it. Mike, is there anything more on that risk-based approach that can help people kind of get through diligence in an appropriate speed to help get to a deal closed before year end?
Well, for sure. I mean, I think, as you're going to move into a process, whether it's a full QofE or risk-based or, anything, you need to obviously have your books in order as a seller, and you need to be fully transparent. And you need to be prepared to respond. I think not having your ducks in a row financially, as it relates to your records, will create lots of heartburn when you come to trying to get through a risk-based approach, and likely may trigger a retrade in your deal, meaning the deal you struck with LOI may be different than what gets either agreed upon or not agreed upon based on the perceived risk of the buyer. And so making sure that all of your numbers hold together and foot, and making sure that you're responsive, and making sure that you have ideally worked with an advisor that's helped do a pre-diligence to go through your numbers and make sure that they're tied out and can assist you with response to buyers' diligence questions. That is all super important stuff to try to maintain the value of the business transaction, and in support of this conversation, be able to get your deal done on time, be able to get your deal through an efficient process. You can't take 2 weeks to assemble data every time there's a request by a financial diligence person on the other side of the table. Otherwise, your deal's not going to get done on time. So critically important that you've sort of done some pre-diligence, that you've got your stuff lined up, and that you've assembled the team to respond quickly and in a fulsome way, so that that buyer can adequately, evaluate that risk and make decisions accordingly.
Yeah, thanks, Mike. And just to switch gears a tiny bit here, when you're looking at the rest of the year here, and you're just trying to organize kind of who's got going on, we've got major holidays that are throughout this. So just state holidays, everything from Columbus Day this week to Veterans Day to Thanksgiving Day to the holidays at the end of the year through religious holidays. There's just a lot of time and people traveling and away from their desks, away from kind of their life outside of work. Matt or Mike, have you found effective measures for dealing with outages during this time in those teams that could be critical to getting a deal done?
Yeah, I mean, think about setting your staged deadlines, your gate deadlines. So say, for example, we got Thanksgiving holiday coming up. Well, the deadline for whatever stage you're passing through could be a financial review, could be could be operational review, could be contract review and sort of sign off, any of those things. Well, you don't want the deadline to be the Wednesday before Thanksgiving, right? You certainly don't want the deadline to be the week after Thanksgiving. You want the deadline to be maybe the Monday of or the Friday before, because A, sometimes deadlines get missed, and B, there's likely an opportunity for a very quick follow-up with questions and answers, and best to get all of that out of the way. So, plan your deadlines with enough lag time before the outage so that you can get things, you can get to final checkoff of whatever stage that you're moving on. And again, I think that you're laying that expectation early and upfront, and you're visually allowing people to visually see these things on a calendar, so that it's sort of in the back of their head, front of their brain, that we gotta keep our dates to be able to execute towards the goal of a close by the end of the year. And quite honestly, save yourself some pain, right? Because the more that you can get ahead of it, the less that you're going to be working over Thanksgiving, over the holiday period, whatever that may be, right? And everybody needs to take their time appropriately.
Yeah, absolutely. And Mike, when you think about this, there's a lot of reasons to close a deal before a year end. It could be a tax optimization for a seller. There might be some performance or bonus alignment for buyers and sellers. just even the capital pressure to deploy in a calendar year, the fact that a clean financial break happens in a year, that's sometimes just very nice in a deal. And it's just nice momentum that goes on kind of before the year end. But there can be there are good reasons to close a deal after year end. For buyers and sellers, tax strategy does come into play. The holidays, Matt, that you just talked about, there's a lot of fatigue that comes with that. And there's sometimes just a nice, fiscal, fresh start that comes kind of year start. And then ultimately, I think people don't necessarily love deadlines can be helpful, but when you're running with the proverbial kind of gun to your head that if you don't get this done today, this is not going to get done, that kills breathing room for some due diligence that may be very important. And so, Matt, Mike, either of you guys, I'd love kind of your opinion on here, but how do you start to advise clients that they should be, really push towards that year end now, or perhaps consider something for the future? And of course, understanding that every deal is independent. But is there any framework or guidance or questions you might ask a client to say, hey, these are a few things to consider?
Well, certainly, if you're thinking about buyers who have a natural deadline to want to deploy capital by year end, in some ways that's a self-imposed deadline. And, we can challenge that assumption or align accordingly to their interests. Likewise, generally for sellers are the much more important tax considerations for sale. Sometimes there's, in a divestiture situation, you may need to make a sale by the end of the year to be able to capitalize on if there's lost carry forward or there's other things that, people need to take advantage of as a seller, particularly if they're selling a business that has lost carry forwards or other tax credits and benefits. You're going to want to drag it into the most recent year. Likewise, on the other side of that coin is, if you're trying to punt your tax liability a little bit and you're a seller, and you are going to have a, big capital gains overhang, for example, you might decide that, right after the first of the year is an important time to do that. It gives you a little more time to probably invest monies and pay that tax, not a huge amount of time, but certainly more time to get some return on the payment before the taxes are due. So, there oftentimes are those considerations as well. I think the state of the business financials that selling and buying are really the telltale signs of what would be the right decision on behalf of advising either a buyer or seller, in our case, with the best path. And each set of those financials and situations are different, right? Certainly the health of a individual is an important consideration. Sometimes sellers have a health scare or have a health reason they want to close right away. Sometimes they, have reasons to want to time things in a certain way based on, other sort of what we'll call lifestyle or life situations. It's not just all about tax oftentimes, but, we do see a lot of tax and tax planning. We often say it's really critical for all sellers, frankly, and all buyers to get tax advice, independent tax advice. We say we're not a tax advisor. We certainly have seen a lot of tax strategies, but we're not a tax advisor and don't claim to be here at Revenue Rocket. So if you're, talking to your M&A advisor about tax approaches, you might want to consider getting outside tax counsel. That's always good advice, because you may be eligible for some tax credits or benefits on either side of that deal, whether you be a buyer or a seller that you didn't know about, and a credible tax advisor can guide you accordingly.
One other thing I was thinking as you were talking, Mike, is the cultural aspect, right? Sometimes, the pressure can be just too much, and it could create, sort of negative relational things between a buyer and a seller, right? And that's not good for anybody in the long run, right? The buyer and the seller need to come together, regardless of whether or not the seller is selling in or selling out. And, if you reach that point where you, you're boiling over, and it's an art, it's not a science, right? You want to keep the pressure on because time can kill deals. But if it's going to have a negative impact on the ongoing relationship, sometimes it's the right thing to just say, okay, everybody, let's take a breath. It's okay to move this, beyond the end of the year, beyond whatever deadline that was imposed. And then the last thing that I'd say is in the review, if there's a need for a material renegotiation, then, recognize that and recognize that that's probably going to reset the timeline of a deal.
Yeah, well said. I think some of those speed bumps can really, you have to take them one by one and understand the impact. And sometimes the deadlines work. We worked on a deal this year that we thought was a very similar time frame, just kind of half year. We engaged the teams at the right pace. We worked through some discomfort in some of the negotiations, but understood that having a transaction done in a time frame that we all agreed to was great for the seller and great for the buyer, and everyone actually moved forward quickly and ended up being a successful transaction. Even though there's our 2025 is quickly fleeting, there's still opportunities to get deals done. And Mike, Matt, thank you so much for the time here today for focusing in on how do we close some deals in 2025, or Matt, as you suggested here, if the time is right, it's 26, when appropriate. Mike, Matt, any closing thoughts here?
No, I think great topic. Again, these principles carry through regardless of the time of year. We all know that the end of the year is a wonderful time for some natural urgency to occur. But great topic. And, the last thing that I'll say is if you're thinking about going to market, towards the end of the year is a great time to get started and get prepared and talk to your advisors about getting rolling on getting to market early in the next year. So that's another thought that came to mind. Great topic. Mike?
Yeah, thanks, Matt, Ryan, for a great topic today. I think to Matt's point, getting to the end of the year, talking about your plans for next year with your advisor or chosen advisor shortlist would be advised if you're thinking about running a process and getting to market next year. Certainly understanding market timing, understanding where the market is, and getting a feel for the value of your business are probably all things that make good sense to do annually anyway. But certainly if you're considering an inflection point in your business and taking in capital or a recap or a sale, it would be an important thing to consider. And get some input from a series of advisors on thinking about that move would be a good timing for that. So with that, we'll tie a ribbon on it for this week's Shoot the Moon podcast. I encourage you to tune in next time when we continue to unpack various M&A topics as it relates to IT services companies and their operations. So with that, make it a great week. Hope to have you tune in next time.